All right, welcome everyone. Hope you're having a great day. Let's make sure you all can hear me. If you please type number one in the chat box to let me know that you can, I would greatly appreciate it. Hey, Helen, morning. All right. Hey, well, how you doing, Alex? A lot of ones in there, folks. I'm just reading the ones that are flying by that have words in them besides ones. It's hard to see them. They go by so quick. Hey, Andres. Well, as we get started, keep in mind that everything we look at is for education. Nothing's meant to be advice or recommendations. If we find something you like, make sure it fits your own personal risk profile and risk tolerance. All right. I think that's not bad on the camera. Let's see. That's probably the best I'm going to get it. Okay, good. Happy Independence Day. You're right. Well, this Friday we are closed, folks. Markets closed. We are closed. Um, Yeah, so enjoy the holiday, that's for sure. You should see emails coming out about it if they haven't already gone today. I've seen some ones that are already set up for it. So, all right. So our agenda for today, we've got our follow us page, and we're going to go into today's trades, economic reports, market review, upcoming trainings, weekly training topic, and then your stock review. That one at the end, folks, is all for you. It's not for me. I don't need to look at your candidates. This is one last shot for you to get someone else to look at that candidate before you decide to place that non-funded trade or not, right? We're going to assume everything non-funded. We don't give advice on funded trades. Just shutting off the volume on my phone because somebody is lighting it up. So it's an opportunity to ask that one last time of what do you think about this? And if you give me more than just the symbol, the what you're looking at and the why, I'm bullish, I'm bearish, credit spread, whatever, I can maybe give a better analysis of it based on what I see. Um, yeah, Patty said a great holiday in my opinion, the greatest in mine. So I agree. Afternoon, Jim. How many more days till Christmas? Yeah, you like that the other day? I don't remember the number. My wife comes in and says, there's only 153 days, I don't know, shopping days left until Christmas. I'm like, what? What in God's great earth would possess you to think of that, to even look it up, unless it showed up on her feed of social media for something? Like, oh, okay. Um, it turned into a great laugh, but um, it was pretty interesting. All right. So here's our follow us page, folks. You can find us on every major social platform out there. There is a newsletter that we have that is, I don't think I have it on this computer, that is going to become available that you'll be able to subscribe to. It's a daily newsletter. It's kind of the happenings of what's going on. Let me see. Yeah, I don't have that email sequence here. It's called the Trading Post. It's pretty cool. Let me see if I got it on this one. I can send it over. It's pretty cool the way that it's set up. Um, yeah, let's see. All right, so let me see if I can send this and kind of clean it up a little bit. And it comes out every day, every trading day, every day the market is open, it comes out. So you're going to see that get added to this. It's a free newsletter. You will not be added to it automatically. You will have to subscribe to it. Um, yeah, it won't put you on the list automatically. Yeah, Patty said maybe it was a hint for you to make more in the market for her to buy presents. May very well be. May very well be. But then one trade that we've got right now, non-funded, of course, right? But one trade we've got right now to say we're crushing it with a swing trade is an understatement, especially after today. We've got one contract left and we're killing it on that one contract. And I'm going to share that with you guys when we get to our trades in just a little bit. So but follow along with whatever platform works for you. And I hear this all the time, Rob, I don't use social media. I don't want anybody out there getting my name. TikTok, oh God, China's taking over. They know everything about me. And, I don't want to go into LinkedIn because this company owns it or, Meta, they own Instagram and God, everything. But go get an old phone, an old cell phone. Don't put service on it. Put Wi-Fi only. Go make up a fake Gmail account. Use it for nothing but these social media platforms, whichever ones you want to look at, one or 10 or whatever it is. Make up a fake profile on a social media account. Put up a fake profile picture. Don't worry about friending anybody other than wealth builders or whatever your interests are. and use that to go ahead and look at your social media posts. That to me is the best way to go about doing it. Yes, Patty, exactly. That's the one. That's the best way to do it. I got a buddy of mine who has 300,000 followers on Instagram, and he's fighting TikTok tooth and nail. And finally gave in the other day. He's like, Rob, I don't have it. I got to do it, man. He goes, I'm missing out on so many followers. And he is. His content will captivate on what TikTok looks for on their algorithms. He will crush it there. So anyway, even this guy who's 70 plus years old, who's petrified of companies like TikTok, is finally going to step in. Now he's going to do the same thing. He's going to use a separate phone, because I told him to. Separate phone, not tied to his other stuff, and he'll just post the same video twice, which he does now anyway. If he puts it on Instagram, he puts it on YouTube or on wherever else he's got it, Twitter and TikTok, whatever. He'll just put them in different places. All right, today's trades. What trades did you do? Drop them in. This is not about showing off. It has nothing to do with that. It's not, I don't want to say anything. Oh, the trade went against me. This is an accountability section. This is, you're putting it out to the universe, to your God, to the head of lettuce you worship, whatever it is, to the universe, that I'm doing this, man. I am in this day in and day out. Yes, I have trades that go against me. Yes, I have some trades that I crush it on. And that's what it is. Just put the trades out there, whatever they are, drop them in. Funded, non-funded, it doesn't matter. Win, lose, draw, doesn't matter. It could have been today, maybe Thursday or Friday of last week. Just get the trades in the content for today. So there you go. Alex said I caught the pop on Broadcom. Me too. Me too. Me too. Exited halfway point, the mid between the fibs for a 12% profit. But I really tried to bull a scalp on Netflix and it went horrible. Ouch. Okay. Patty said SPY $60, Broadcom $135. Nice. Really nice. Trader Will said Caterpillar doing well, scaled out 4 of the 6 contracts. Excellent. Good job. Good job. So let me show you a couple here. Congratulations, Patty and Will. There you go, Alex. Much appreciated there. And let's start with the little bitty one first. Let me minimize that. I got to get that out of my way. So here is our Trade with Rob tracking sheet, right? And Andrew, if you would drop in a link to Trading Like a Boss, tradinglikeaboss.com, okay? Tradinglikeaboss.com. Let me explain this to you. This is all of our free resources are on this page. Power Hour is the start of the week. It's always going to be the one that's on the far left. Trading Coach's Playbook is the end of the week. It's always going to be the one on the far right, top row. And whatever's happening right now is in the middle, right? So Dog Days of Summer is all free resources that are available to you guys from right there, okay? You come down here and there's Trade with Rob. It is a free resource. You get emails from us. Again, you're not on this email list if you haven't said, I want to be on it. You get free emails from us with potential trading candidates. I send 3 candidates out. If you're not registered, you get a video with 3 in them. If you are registered, you get all the candidates. I don't review them all, but you get a list of all the candidates. So now you're not just looking at the 3 that I chose. You've got 7 or 8 or 10 or 15-ish more on your list that you can look at as potential trades for tomorrow. So when you go over there, you just click on that and register for it. Again, it's free. So this one was from Friday. I don't do a class on a Trade with Rob on Friday. So there's no trade setups for Monday. So this was Mickey D's. We got in at 286.5. We got out at 291. One contract only is all we do. We're up $324. Our average win in this account is 256.92. Right? We've had 42 trades this year. And I reworked this because we have got a 2024 one from June as well. So we had a full year's numbers there. I know what to look for a year, and now I know how we're shooting for things. Here we are, almost 7 months, and we're near $11,000 in 7 months. Okay, so not horrible on one contract. We've got 42 trades that we've taken so far. 37 won, 5 went against us. No break evens this year. We had some break evens last year. Okay, but I want you to understand something. There's 145 lines on here. Okay, which means there might be 3 header lines in there. There's 2 for sure, maybe 3, but let's just call it the 2 out of 145. That means 143 of those trades never set up. There's 143 trades. 100 of them never set up. And that's what I expect with these. About one out of every three is going to be a potential trade setup. They're not all trade setups. You get real crappy market conditions like we had a few weeks back, where we're slopping all over the place, so getting big gaps up or down. You don't have any trade setups. And by the way, when that happened, we modified a trade setup in here. I modified it to a an aggressive switchback trade, for when it gaps. And the very next day after I put that video up, we did this $3,000 trade on Netflix, right? Crushing it, absolutely crushing it in one day, on one trade, all right? So that was a great trade on Mickey D's. You'll see that one later on in the trade with Rob. I just want to save this. I'm going to close that down for now. And then here on Pop, actually, let's not do that yet. Let's take it over to Broadcom. All right. I'm going to take today off of the screen. And here we are Friday. So where did we close? We closed in a bullish bias rank of 2, right near the Fibonacci line. It's the -5, so it's a great fib level. It's our extensions or expansion levels that are up there. And what are we looking for? Well, it's a bullish trade, so I don't want to take anything to the downside. I want to break out above that fib line, whatever that level is. I can't see it, when we took the last bars off the right. I can't see the exact level, but I want it to break above, retest, and bounce. It is not a difficult concept. I preach the same thing week after week. And we gapped up today and pulled back. So if we go look at this on a 5-minute chart, what in the world happened? Was this a viable setup or not? Well, here's the line. Transferred over automatically on Omega charts from the daily chart. So we closed on this candle on Friday at 269.35, and we opened today at 274. So what did I say? 269.35? 269 and a half, we'll call it, and we opened at 274 and a half, close enough. So $5 gap up, ran a little bit further, and then we pulled back, and that fib line is at 272.12, and we closed on that 5-minute candle. We closed at 272.54. Now, first candle of the day. So if we go back and look at today on a 1-minute chart, one, two, three, four, five. So that's our lowest close of the morning, was right there. So that close was 272.54. That line is 272.12. We're talking about 42 cents higher than the fib line, and we bounced from there. So whether you took it, I didn't wait for that close. I got in on this bounce here, intra candle. Exactly, Patty. It is a beautiful setup. I mean, the stars aligned. Everything was perfect. This was not, oh, I see the moon. I saw everything. Jupiter, Venus, Pluto, the next galaxy, they were a perfect alignment. Everything was there. It happened exactly like it was supposed to. You waffled around for a few minutes this morning on 1-minute candles, and we had a great move to the upside. And then what happened? Right now, I'm going to bring a current so we could see numbers, right? And we've run from there. Now, right now, we're in this at about 273, 273 and a quarter. I didn't write down what price we got in on it. But we've got a resistance level above our head of 280.81. So 279 and 3/4, 279 and a half. Somewhere in there is going to be our target. Our high today was 277.71. Now, I'll keep my eye on the shorter term candles. And decide where to exit out of that trade based on pop rules. If you are following along with micro day trading rules, and I really hope that you are, right? Generally, you may have already been taken out of this trade, and if you got in after that pullback and bounce, you're still rocking in here and going strong, right? I've got this one still open. Again, it's a pop style setup, so I have this still going for us right now. But overall, not a shabby setup whatsoever. What was up with the crazy wick on Broadcom today? Yeah, I don't know. I don't know. You talking about the pullback to the downside, Alex? Is that the wick you're referencing? That back, where it backed away? Patty said I was chicken. I put 15-cent trailing stop, but you made money on them today, $135, Patty. So you did well. Yeah, nosedive, then it climbed right back. Oh, Alex, that's it. I'm glad you asked that question. So you're asking, let's look at a 5 minute candle. Why did it take off and then nosedive? Right? So what y'all tell me, you tell me, Amelia's in here, right? Can I say y'all, Amelia? Is that okay? Did I do it all right? If oh, you're talking about this one right here, Alex? Okay. Um, we'll talk about both. But what caused that candle's reaction like that? That first candle of the day, what caused it to do what it did? You have to ask yourself, or you have to speak out loud to yourself, or verbally somehow to yourself. It could be quiet and quiet, in your mind. But what happened? Analyze the candle. Where did it open? Where did it run to? Where did it pull back? And then I want you to answer the question, why? What happened that caused that? Why did this take place? This is a crucial component of good to great when it comes to trader, is understanding the mindset behind that candle. That is what will propel you to the next level of trader if you can get that mindset right. That's what it's all about, is figuring that candle out. When it went up, people cleared out a lot of their investment. Like I said, it's possible. You had some traders selling open positions. Orders could have been triggered in there. Sellers and buyers. Okay, thank you, Amelia. Filling the gap. And we really didn't fill, right? Because we're still open. So an attempt to fill the gap, maybe, but more importantly was it pulled back to that support level. All right. So here's what happened. I'm going to clear that off. And now let me grab a blue. Let's get that line out of the way so that's not, interfering with us. And let's go grab a blue pen. So we closed here. We opened here. And we ran right on the open. Okay. What the stock did not do at this point was test a support or resistance level. In this case, support. It did not test. So what did it do? It gapped up and ran. So you are trading the breakout if you're trying to take this trade. So the bulls gapped this up. And I'm not saying the bulls were wrong, but the bulls tried to run it further. And you know what happened? They just threw, the quarterback just threw a 90-yard pass down the field. And the wide receiver is running down there to catch it, and he's just freaking out of breath running that far to try to catch that ball, right? Because it was 90 yards he threw it from the 0 line, right? From his own goal line. He threw that 90 yards in the air, and he's exhausted, right? Woo! And it pulls back, right? Why does it pull back? Because we need to find an area of contention, an area of support that the average person out there is going to say, oh, yes, this makes sense. Now, I'm not saying the average person is going to trade it, but mentally it jives. Whether you realize it or not, it does. You just have to get both sides of your brain, right? Or you've got to get the emotional side of your trading and the intellectual side of your trading brought together, combined together, seeing the same exact thing. Because this trade here, if someone waited for that gap up and it started to run and said, oh, I'm in, that was not a technical entry. That was an emotional entry. FOMO was the entry. Fear of missing out. Oh, if I don't get in now, what? It's never going to go back up again? It's never going to pull back and go up again? This is the only time ever in history that you can get a Broadcom ever, forever? Of course not. So don't treat it like that. Oh, I missed this one. Okay, so what? So what? It's Mr. Softy came down the block. You didn't get it today. They'll be back tomorrow. Mr. Softy ice cream truck. The good humor man, whatever comes in your neighborhood, right? For us, it was Mr. Softy. Good humor was frozen stuff. Good Softy was fresh, right? Soft serve. Let's see. It's like a kid seeking reassurance before going out on a limb. Very human tendency. Yes. That's exactly it, Alex. Right? And we got that pullback, and then we closed near that level. We closed right there. The next candle we opened up, we stretched down, and now the bears tried to take control and pulled back, and the bull said, thank you, and bounced it off of there. if you're getting in somewhere between where we opened and where that support level was, anywhere inside of there, as it pulled back and started to bounce, you've risked the least amount of money possible in that trade, because no matter what, and I mean no matter what, your risk must, not should be, not ought to be, not might be, must be somewhere down below that support line. You cannot say, because I got in here, I'm going to put my stop here. No, you're not. Your stop is still down here. Well, Rob, I got in here. Your stop is still down here. I got in at the highest. Your stop is still down here. Doesn't matter where you got it. Doesn't matter. Okay? Now, that wasn't the candle Alex was referring to, but I thought it made a good point to talk on that one first. Alex is talking about this one here, right? I don't know the exact reason behind it, but if you did an analysis, Alex, and you went in and you looked at a 1-minute chart or a tick chart on that candle, you might find, and you're looking at, the NASDAQ level 2, where it tells you every order, how many contracts were traded, bid, ask, all that stuff. If you look at the level 2, you might find in there that somebody possibly had a market order filled at this price, whatever that low price is, or somewhere in there near that low. Someone put a market order out there and they went, oh, thank you, ka-ching, right back up again. And I don't know how fast it came out, right? Now that's on a 5-minute. If you look at a 1-minute, how do you do that? Look at the 5-minute candle, look at the timestamp. At the bottom of my screen, it says 11:50, 6:30:25 at 11:50 a.m. today. So if we go to a 1-minute candle, and let's go, now 11:50 means that's the closing time of that candle. So that means from 11:45, 11:46, 46, 47, 48, 49, 50. Those 5 minutes make up that one candle. So let's go find 11:46 today. And we find that it all happened in one candle, one 1-minute candle at 11:49. It all happened at 11:49. Okay. And every bit of that pullback was in that one candle. Why? If you dig down into it, you will probably find that there was something weird, like a market order, or it might be an order that was filled that is not even a real order. And what I mean by that is someone complained last week. They filed a complaint with the governing body of the Securities and Exchange Commission, with the SEC, right? And they filed a complaint there, FINRA, whoever it is now, and said, listen, I did not get filled. They investigated, went back to Merrill Lynch, Fidelity, TradeStation, whomever, and said, oh, you were definitely wrong. You need to fill this person at that price. And the market maker said, okay, ting, and fills that person today. You never saw it print there. It filled and went right back to the original price. It also could be bad data on there. Okay? So I don't know exactly what triggered it, but those are some of the root causes of what happens in there. Now, one of the things you can do, if your broker has the ability for you to call and talk to a broker, you could call them and say, what triggered that move right there? And they may have more insights. They will know if there was that false trade placed in there. They will be able to see if it was a market order that happened in there. They're not going to admit to you that a broker took advantage of somebody. Yeah, some poor dude did not read his order before sending it. Exactly, Will. Similar setup on Dell today, but it got choked up along the person's pivots, slightly above the fib. There you go. There you go. But definitely a good one to eval, right? Last one for me today is Goldman Sachs. And it wasn't a trade today. We did Goldman Sachs. We entered a 4-contract swing trade in power option plays on June 11th. That's like a forever ago, right? Today is the 30th, a forever ago. We got in when the stock was at 617 and a quarter. So if we go to Goldman Sachs, go back to a daily chart, and let's go to, what did I say, 611? I don't remember. Too many numbers. 611, 11, 17, 611. So on this day, we closed here, bullish bias, rank of 1. We gapped up, retested, and bounced. Gee, looks just like the candle that happened today. Not as big, but we gapped up, retested, and bounced. And then and only then do you take the trade. So we get in our trade there. Our first exit, if we do it this way, our first exit came in on 618, right on this day. We missed it slightly, but we missed it on these 2 days here. We came up here, and we're out at 633.30, right? Right on here on the 18th. That's two contracts. Then we go to 624, which is right here on the open. We didn't get a hit on that was 23rd right there. We didn't get hit on the 23rd's close. We're too far away. We gapped up. We got hit on the open because our exit was 651 and a quarter. We wound up getting out of this one at 654. All right. Holy mackerel. All right. Now, 617, we're going to make it easy. We're going to say it was 620 we got in the trade. 620, 30, 40, 50, 34-point move on that one contract only. So it's a 2-1-1 exit. Four contracts, three exits. Two contracts, one contract, one contract. Right? So far on three contracts of our four, we're up 5,400. Call it $5,400 on those three of our four contracts. Watch what happens. Right now we're at 705.83. If I got out of that last one contract right now, we're at $5,400. It takes us to $12,271. So call it $5,000 to $12,000. There's about a $7,000 profit right now in the one last contract if I close it out. We made $5,000 on the first three and $7,000 on the last one. And I say this all the time, and this is the perfect proof of it. If your setup works well on the way we do my either 4-3-2-1 or 2-1-1 setups for our swing trades, if that happens, there's an opportunity on the last contract to make more money than on all the other contracts together. And that's exactly what happens right here. If you get out now, if you wait and it pulls back, and goes down $5,000, and it's not there, of course, right? But as of right now, you could make that conscious decision to go, ooh, pick me. I'm getting out today. And if that's the case, that's where you would be, right? Great setup on Goldman Sachs. I mean, you saw NVIDIA. NVIDIA, we're up $1,150. We've got three of our four contracts exited there. We've had a few other swing trades in here. AMD, we made $1,800. CrowdStrike, we made over $4,000. $1,700, sorry. We made over $4,000 on CrowdStrike. Amazon, we made $2,000. MasterCard, we made $2,500. These are all swings. These are all swing trades. We don't have a lot of them. This Goldman Sachs, we made $1,300. Right? And we're not without trades that go against us. CrowdStrike, we lost $5,000. This Goldman Sachs, it was Home Depot, we lost $1,100. SPY, we lost $3,000. Meta, we lost $5,000. Coinbase, we lost $200. This SPY, we lost $1,000. Okay? We're not without trades that go against us. Right? But the open ones, we're rocking it. We are crushing it right now on our open trades. Alex said, I hate when it looks like a proper retest and bounce, but then it just keeps bouncing along the fib line, like skipping a stone across a lake. And the problem there is time value deterioration, right? And you're going to have those, Alex. Those are the ones that you go, oh darn, and you're done, right? It's just part of the mix. Yeah, boom, exactly, Patty. You're exactly right. Yeah, that's a good point. Andrew, take a look at Jim's comment there, if you would please. So overall, drop in we're talking pop, guys. So there you go. Perfect. Guys, Andrew just dropped in power option plays. If you're interested in learning more about it, go to it. I mean, this is what we do. This is exactly what we do. We talk these things out. Every trade setup that we look at, we talk it out. Do the quarterly. You'll get a 2-week trial with it. You can always cancel it. The monthly, there is no trial, right? You start immediately. There's no trial on it. All right, let's go back into presentation. We've been going a long time on today's trades. Economic reports. What the heck is happening out there in the world? Let's go over to Forex Factory. Let's go expand. All right, we got nothing today. Powell speaks tomorrow at 8:30, at 9:30, sorry. So right out of the gate tomorrow morning, we're going to have volatility in the market. And depending on how the day goes and how the questions come, you may literally see this happen for the first half hour tomorrow, 45 minutes, hour, based on good question, bad question. Meaning the market liked his answer, or we hated his answer. You could literally see that whipsaw. You could see this happen too, where we just take off. I wouldn't expect that though. 10 o'clock right behind that, you got PMI, Purchasing Managers Index. You got JOLTS, which is jobs. ISM, I'm not too concerned about. I don't know if the Fed looks at that one or not, but you can read more on it by clicking on the folder. Then Wednesday, 8:15, we've got ADP non-farm payroll. That, unless you're trading futures, is not going to affect you unless you have an open trade. But if you're trading futures, that's coming out at 8:15 in the morning, you could have that affect overall what's going on with your position. So a little bit of caution for that one. If you have open trades or you're looking to place a trade. Thursday, we've got 8:30, a couple of reports in there. Average hourly earnings, non-farm payroll, unemployment rate. They're all the same report. Unemployment claims, all the same report, right? But they're pre-market. 10 o'clock, we've got ISM, which is Purchasing Managers Index again. ISM, well, this was ISM Manufacturing for today, and this is ISM Services for Thursday. Friday, we've got no reports out there at all, okay? Perfect. All right. So market review. Let's go take a look at what's going on today. Looks like we made it. We hit that all-time high on Friday. On Friday was the first one. Then today we hit another all-time high, but we're pulling back. Guys, we're going to be in a little bit of a sloppy mode right now for multiple reasons. Number one is, let me not do it that way. Let me see. It won't let me drag it. Okay, so let's do this first, then I can drag it. Okay. I'm going to take the symbol grid down, just give us a little more on the screen. All right. So this green line was the all-time high, right? We missed it by $1 or so on Thursday, the 26th. Friday, we finally hit it. Today, we're up a little bit higher, pull back. But we've got a lot of quick lines in here. We've got the recent all-time high, which is here. I put a blue zone there. We had another line splitting this one in half, which I've removed now. But we're right at resistance. If we close right here, we'd be in a bullish bias rank of 2 on the S&P, which I'm good with, right? Pull back and bounce, but to where? Do we pull back to the old all-time high and bounce? So what? I don't have a lot of room in there right now. So I don't have a lot of upside potential if we pull back in there. I really would prefer to see the pullback take 2 or 3 days. The 8 and 21 start moving up. The 8 gets up to that level. We start climbing up, maybe another day or 2, 3 at this level here before we break out, retest, and bounce, where I've got a decent movement opportunity in there for those 2 levels. And then from there, I've got some other levels to contend with. So we did an ABC, I think it was Jennifer. I think so. She's not in here. We were in another training and we were looking at an ABC pattern. Jennifer brought it up on, I think it was Jennifer, on SPX. So we went from where the S&P started the fib, where it ended its fib, and its pullback. And that's great and fine and good. And it works for when you have stocks or markets at all-time highs. The problem I'm running into is the pullback wasn't as deep as I like it. It only made it down to the 236. Really not as far, at least the 382, but really I'm hoping for the 50 or the 618 for the pullback. We didn't get anywhere near there, but that's what we have. So what does that tell us? A to B, let me take that off the screen there. So A to B, that's our initial move, right? That is 100% of our move, whatever it was. Then you get the pullback, and that's B to C. Whatever that distance is, $10, $100, $1,000, doesn't matter. Whatever that is, we're going to extrapolate that number out, and we're going to look for that same 100% to the upside. So I'm going to make this up. If this was $200 move, and again, I don't know what it is, but I know it's one of 200. If that was a $200 move, then this one would be a $200 move. It's 100% of what the previous one was, to the penny. Days to get there doesn't matter. Angle, altitude, none of it matters at all. It's the level that is all that matters. And we wind up with one of those levels, that fib level, right up here. And that is that 663, 66, 34, 39. Right? That's 100%. It's called an extension. You had the fibs, it pulled back, and we take the original fibs and we extend them out from the pullback. So from this C point, and then that actually becomes, if you drew it out, that would actually become C to D, is what that is. C to D. Okay. I have an advanced fib tool that draws it, but you don't need to. It's an AB equals CD. So if I go to where it started, A to B, pull back to C, and it draws automatically my D line. Right? I'm not using that. I do it manually because you don't have access to that tool. So I do it manually, and I just grab the regular fib extensions. I come from where a fib started, where it ended, to its pullback. Let me do this. Yeah, it fully extends out to the right, so I can't really pull it off and hide it there. So, but that's the one that we use. Just a standard Fibonacci extension line. It's this here. It's got a V and then a couple of colored lines down below it. That's the tool that we use for that. And anytime you have stocks, you're getting stocks that are doing it right now. NVIDIA is at an all-time high or near an all-time high, right? You want to look at it in an NVIDIA or so forth. This is the indicator because yes, you may have some fibs up there, but you know what would be awesome? If I can get a confluence and two of those fib lines align, a regular fib line and an ABC line match up, especially if that 100 aligns itself. It also, that 100 gives you an imaginary level that we're not making it through that level. Nope, it's not happening. And I don't mean we'll never get through, but that's a stopping point. That's a definitive stopping point, is right there. Hesitation level. Probably one of the strongest hesitations you will ever run into. You already had a 100% move. You pulled back a little bit. Now we extrapolate that out, expand that out, and we have another 100% move. We moved $100, pulled back, and moves another $100 from where it pulled back to. And so 100% confluence is what it is. All right, let's fix that. All right, so as we look at S&P then, what are we looking for? My crosshair was in the way. Let me get that out of the way. Okay. So this level right here is what? That level was the all-time high. I don't need that line any longer. Doesn't matter to me. I don't need this blue zone any longer. It doesn't matter to me. See how things have changed drastically now, right? Will we get a pullback at where that 61, 47, 43 could be important? Yes, because there's still a fib line there, but it's not the current fib that we're contending with right now. It's not something we're drawing lines on our existing fib, but it's an explanation if we start to get a pullback to that. It may also be a point that you look at, which would actually, I would not mind that. If we could get a pullback, 61.47, let's see. Right there. If we get a pullback to that 61.47-ish level and a bounce, that would be great because that pullback would give us enough time for the 8 to catch up and we'd have a little bit of a rise potential in there, right? Because what do we have right now? We have a Roman candle. 4th of July time, folks. Roman candle. Tubular firework, 18, 20 inches long, something like that. It's been a long time since I've shot one. If you read the package, the instructions on the packaging, it tells you to not hold it in front of you because flames can and do shoot out of the back. You're to hold it out here on the side and shake it, and fireballs shoot up in the air. You got to shake it or else they kind of dud out, right? And what happens? That fireball shoots up, takes off. But all it does is it's a little rock that gets up to a certain level and then it just falls straight down, right? So that's what happens if the market goes straight up. So I don't like this big, strong, straight move. I prefer wherever possible, break out, pull back, break out, pull back, break out. Even though it might be small, give me some kind of pullback in there to give me confidence that we're on a steady march forward versus ooh, that's not looking good. We're just kind of leveling out. Gwen said, when you find a new stock that you're creating fibs for, do you only draw the most recent fib or do you draw the one before that as well? so you can use it to determine the next level of movement for the stock. What do you do? So for me, Gwen, I go back and I look at 6 or 8 months of time. So if I had, why did nothing pop up? There we go. I don't know. Let's see. Dominion, not sure. Let's see. Okay, okay, there's no fibs on that. So I go over to template number 1 where I have no lines up there, no moving averages, none of that stuff. I'm on a daily chart. Okay. I go back to an F5 or an F6 in time. So I start with an F5 and I'm looking for the largest directional move closest to the right side of the chart. Now I see on the left, there's more to the story here. I can't see where the run is starting here. So I have to step that back a little bit. Now I have a better view. Okay. And what my main focus is the largest directional move, right? Well, this was the largest directional move in here, right? Because this was a move up, this was all sideways. We came up here and we failed, right? And then we had a new V bottom and kind of this mess in there and we failed, right? Then we had a bottom from here to here, right? In that direction. We had one this direction here, and then here. And that one might be still small, okay? So theoretically, what you'd want to do then, Gwen, is you'd want to look at this from the standpoint of, and don't look at my fibs and say they're too close to each other. I know it's not going to work on this stock, right? But I'm going to draw here. Okay. We have not violated above the -618, so there's nothing to redraw at this point, right? But we do have a stock that goes back to June of last year. It's more than a year old. If it's 8 to 10 months, we've got to redraw. So now I need a new place to redraw. From there, my next natural redraw would be here. Right? Did we ever violate it? We did not. Do I have anywhere that is bigger than that move? I don't think so. So we'll call it 7 3/4, so whatever, 783. If we look here, that's 882. That's a bigger move. So it hasn't closed below the -618, but it's a larger move, right? So we need to draw a fib then in here. Okay. And I don't have anything that's violated it just yet. So that would be the fib that I would work off of. Gwen, does that make sense? Yeah, F5, F6. So 6 or 8 months is what we're really looking for in time. But Gwen, going through that, did that help as far as laying that out? Yes? Okay, good. Good. You're welcome. Excellent. Okay. Now, what I'm going to do is delete all of this off of here because I don't want to look at this and think that that belongs on a list. If I have fibs on it, I assume the fibs are drawn and they're good. If there's not at least $3 between the 50 and the 618, it's not good. And for me, if it's not at least $5, I'm not trading it. All right. So let's go ahead and go back into presentation. I just want to look at the S&P, I mean the VIX. Let's go back and get our symbol grid. Let's go back to template number 2. All right, so we're up 75 cents today. 1707 is our VIX. There's really nothing to talk about. We're in a low zone, low price. There's no cost. Tom said, why are you looking for 5 to 6 months of time? Because once we get to 8 months or longer, Tom, we start to get to a point where the fib is too old. So that 8 to 10 months in there is where it's, we got to redraw if at all possible. We may not have an opportunity to. You can get a big move up once, and then we just go, boop, and it dies and goes that way for a year. There's nothing as far as bounce. That 5 to 6 months, 7 months, 8 months of time tends to work the best. Did you make what up, Gwen? No, not 90 days to redraw. No, in Fibonacci Trading Mastery, we go over it, and it's in pop. Guys, if you're in POP, scroll down in the document. There's an entire page on redraw rules. And one of the redraw rules are when it gets to 8 to 10 months old, it's time to start looking for. Doesn't mean redraw. Start looking for a place to redraw because you may not have it yet. You may have a pullback and no bounce. It just keeps dropping, nothing bouncing yet. You have a reason to redraw, but not a place to redraw yet. Okay. So VIX is fine. We're still in a low zone right now. If you're a buyer, life is good. If you're a seller, you're struggling a little bit right now trying to find good premium. Okay. Let's go back here. Gap trading stats, guys. Oh, I wanted to talk about those one day. Yeah, I'm not going to do it today. I showed this in training the other night. And guys, if you incorporate this into what you do, it gives you such a massive advantage. Do we have time? Let me see if I can find this real quick. If I can find this one document, fine. If not, then we don't have the time. Let's see. No, that's not it. I got one more place to look. Again, if I can't catch it right away, we're done. A case study here. That doesn't even belong on that product. All right, not sure. I would have to find it, but basically, the one that I showed the other night, we had a gap that it showed that if it gapped up $1 to $1.25, I think it was on Apple. If it gapped $1 to $1.25, up or down, didn't matter. It had a 72% chance of filling the gap, meaning if it gapped up, 72% chance it'll fill it on the way down. If it gapped down, 72% chance it fills on the way up. And that statistically on its own sounds great. But then when we broke it down and looked at the bearish gaps, it only worked like 28% of the time on the downside, but worked like 89% on the upside. So if the gap went up, it was going to pull back and fill that gap before the end of the day at a very high probability. Now, when you're looking at your trade and you're looking at that gap and you're trying to figure out, do I do this trade or not? That's where GapStats just laid it all out for you. Right? Check out the trainings that are in there when you get the emails, folks. To give you some insights, go through the trainings to give you some insights on how we use the gaps. If I remember for next week, I'll bring over a statistic and show it to everybody of what's going on right now in the market, right now with one stock, and how we would use it to our advantage. Yeah, you can put a note on there, Jim. I don't pay as much attention to it. Jim's saying put a note on the VIX for it spiked with the tariffs. It's not a bad idea. It's just I never put notes on. And my VIX, because of these boxes on there, if I click on it, it wants to edit the box. It becomes more of a hassle than anything else to try to do. So until I can figure out a way to color in zones without having boxes on it, I'm stuck to really not drawing anything on it like I used to. Be able to put notes on it like I did. Okay. Weekly training topic. Record highs and wartime. We're at the record highs, and yep, we got wartime going on. And is it real wartime? Is it not real wartime? Did we destroy the weapons of mass destruction? Did we destroy an energy system? I mean, there's so much happening out there. But never before can I remember, I'm 60 years old, and I've never been very politically motivated. I've been earlier on in my life, it's very much my vote doesn't matter. My candidate's not going to win. I'm in New York, so what the hell's the difference? I'm not going to even bother voting, right? And I paid no attention to the topics. I paid no attention to the rhetoric. I paid no attention to anything. But I knew that I could go to CBS, ABC, NBC, and whomever, CNN, CNBC, and get real information. And today, everything is so skewed to opinions on both sides, it's very difficult to come up with a true answer no matter where you go. Right? So you've got to be able to read between the lines a little bit and almost walk over to enemy territory. Oh, I'm a big Fox. If you this is you're a big Fox News guy or gal, and I don't want to watch regular TV or CNBC or CNN or even CNBC these days. Is very politically motivated. One guy in particular on that morning show drives me nuts. I used to love him, cannot stand him any longer because he's very politically motivated in his opinions now. Very, very harsh opinions. And when you look at one side or the other, you're going to have to start looking at the other side. You're not going to have a choice. If you're trying to figure out what's really going on, one side's not telling the truth. It's just not. Everything is very skewed these days from one side to the next. But what does a record high tell us? All it says is we've hit a certain price level. We hit record highs all the time. Go back in history. Heck, go back. If we go back to the S&P 500, and I turn this into, let's not do it here. Let's do it on template number 1. If I turn this into a yearly chart, every candlestick is a year. And I know there's a lot of fib stuff in the way there because of what it is, but you can see my fibs go all the way back here to, starting in 2009 on this chart, right? So I got a lot of fibs drawn in there on the S&P. But we're talking about, when the S&P was $500, $600, $700, $1,000, right? And went from 1,000 to 6,000 in the last 20-ish years. All right. So it's had massive gains. We're always making a move, right? The daily chart is just a bit different. Okay. So you're definitely going to want to go ahead and analyze what's going on in markets in the past. So go back historically and look when we had these massive moves, what happened. And you get up to that all-time high, and in many cases you hit it and then you pull back. And you'll even get a little bit of a bearish market. Gee, we had that already, didn't we? You'll even get a little bit of a bearish market from there and then a bounce. And when it bounces from there, the question is, how aggressive are you in capturing that bounce? If you go back historically and look at every major catastrophe that's happened all the way back to the Depression, every major catastrophe that's happened, if you were invested in the stock market, you absolutely crushed it. Crushed it. Crushed it. Right? You went hog wild on it if you were buying at the right time. Right? So now we've made a move back up to that all-time high again. What's going to happen? I would expect we vacillate a little bit. And we vacillate around in there a little bit. We're going to see small pullbacks, bounces. You need to analyze every single day what's going on. Talk it out loud. What do you see? What is that line that I just drew in there? I see. It's that old fib. So it gives me a fibit in there and maybe a place we pull back and the moving average catches up and we bounce off of there. Right? If we don't pull back and we break out of that 6,200 level, what are you looking for? Well, I'm looking to break out, pull back, and bounce, and I'm looking to move up to that 618 level, that next, 0.382, 618 being the ABC pattern. Right? But you need to talk out what you see. But you need to think it out logically. Do not pick one side of the coin and think it's giving you the full information. Right? You have 2 people getting divorced. There's 3 stories. His story, the partner's story, and the truth. Right? Kind of a combination of both. You did this and you did that. Yeah, okay. Right? It's no different here with the news right now. You're going to have to find a little bit of that truth on both sides and draw your own opinion as to what's going on. But when you look at tariffs are hurting us and this and that and the other, it's crazy. Right? Have things gone up because of it? Yeah. Why hasn't gas gone up the way that they said it was going to go up? Why hasn't it gone through the roof? Even with the war, potential of war, it's gone up a little bit here at 10 or 15 cents a gallon, kind of a hedge. That's just a hedge on the gas station's part that God forbid it does spike and all of a sudden they're stuck with gas or drop down and they're stuck with gas and now they need to buy more because it's spiked. And you bought it at a lower price than the market's going for and blah, 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 right? That's all that is, a little bit of a hedge on their end. But the opportunity is there. You just got to read that chart, manage day by day what you see. Never, never, ever get to a point of, oh, I think it's getting to that next level. When? Today? Oh, no, sometime in the near future. No. You're looking at that near future, yes, but you need to look at today. What's happening today? Am I getting a bounce? Am I getting a drop? Is this a place to take a trade? Where we are right now on the S&P, it's not a place for me. Like if I was trading SPY, we're too close to resistance. What am I going to do? There's nothing to trade. I'm waiting. Break out, pull back, do something, whatever it is, break out, bounce, pull back, bounce for me to take the trade. Um, Brenda said, if you know the truth will make you free. Yep, it'll set you free. The key is accepting that the truth, uh, accepting the truth for what it is, like it or not. Exactly. Exactly. I don't remember the name of the movie. I think Michael Douglas, he played the president and he had a little girl. The wife had died before he became president and he ran on that, and they couldn't attack family because of it. And then he had a girlfriend and she was a lobbyist. There was all kinds of dirtiness going on there, right? All kinds of yucky feel type stuff in there. And you can't handle the truth, right? Or it was in what was it? Jerry Maguire was in a movie with that too. You can't handle the truth, right? It's the exact same thing. You've got to look at this objectively and say this is what's going on. The American president. There you go, Trip. Trip, you're always good for stuff like this. You know this inside and out. Hey, good, Charles. I'm glad. Appreciate that. All right, guys, I've only got like 4 minutes left. What candidates do you want to look at? Drop them in. I'm going to switch over to all symbols. What do you want to see? NVIDIA is rocking, baby. Woo! Yep, a few good men from, yep, exactly, Alan. QQQ. All right, we're at resistance. Oh, no, we got to get above this. Sorry. So we're just above support. Wonderful. Close here, pull back, bounce off of the 548. Yeah, we're at all-time highs on the Qs. All right, so very nice. Very nice. Pull back to the close here, pull back to the 548-ish area, in the area, bounce, 558.67 resistance. I'm looking at about 556, 555 is going to be my target on this one. So great setup. SPY, not so much. Right? We got to get above that 619 or pull back to that 607 before we can do anything with this one. Right? And if it does break above that 619, 628, almost 629 is resistance. So I'm liking that a lot. And then GLD. Brenda said her thoughts too. Good. I'm glad to hear that. So gold's kind of getting slapped a little bit, right? The last couple of weeks. We're gonna do price. Okay, so we're at 303.52. We're in a neutral bias right now, rank of 3. There's nothing there for me right now. I think gold has taken such a massive run. It's more of a, to me, because it's always been used as a hedge, it's harder for me to commit to say, yes, I'm buying here. When I was buying at 175 and now I'm buying at 300, right? It's hard, right? Same with silver. Silver prices come way up as far as cost goes, right? The cost, not Costco. The cost goes. All right. So I would be careful with this one. Last one that we've got is Tesla. Zoom in on that. You're welcome, Brenda. So, I mean, great news on the robo-taxis in Texas, and then it gave it all back in 2 days. Kind of fell down a little bit. Lower highs on Tesla. We've got a low here. Slightly higher low, but a low. It really depends where we lay out on here. As far as do we bounce or do we fail at that point? But the good thing is it won't take much for us to get back into a very tradable position. I like this bullish. Get above that 323.79 level, retest and bounce. 8 and 21 are sitting right there, Gene. Very excited. But I needed to close above the 8 before the pullback and the bounce. Excuse me. If I was taking it without the pullback, the close above and the pullback and bounce, I would be taking a very small amount of contracts, probably one at most. Right. But I still think Tesla is going to be a major part of our markets for decades to come, right? Decades. So with that, everyone, I think we are good. Yeah, Glenn, sure. We'll do one more. MAR. Yeah, we're right at 1 o'clock, so we're good. MAR. Oh, so closed great yesterday or Friday. Nice pullback today. I'd like to close here and bounce tomorrow, and you got 280 as resistance. It's a bullish bias rank of 2 if it closed where it is right now. So I wouldn't take the full allotment. I wouldn't take it as an aggressive trade, but I would take less. So just as an easy example, if you would normally put $1,000, let's say you put, let's say you normally put $1,000 in. An aggressive trade might only be $400, right? But somewhere in between, you might spend $800 on, again, less contracts than full, but more than your aggressive. And that's because we're at a 2 instead of a 3, instead of a 1 as far as our rank goes. Yep, Jim said, remember, tomorrow, 9:30, Powell speaks, 10 a.m., more reports. The stock you're looking at might do what you want it to do when Powell talks or the reports come out. Exactly. Gene said, very wise. Thanks. You're welcome. All right, ladies and gentlemen, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember this. You're just one trade away. Take care, everybody. I will see you all at our next update. Bye for now.